Today's election day, so they will be voting. So this is when polls close eventually, and then we'll do a live coverage. Our live coverage of the event begins at 11:30 p.m. GMT, which is 6:30 p.m. Eastern time. But we're here to talk about gold. So if everything looks good, I think we can start. Right? Yeah, I see quite a few people in the audience. We'll have time for questions. And yeah. So let's kick it off. So 5 things to know about gold. So a quick presentation of myself. If you're not familiar with me, I used to be a retail trader, a computer programmer. I founded Forex Crunch back in 2008, and I joined FX Read in 2018. I am the premium product manager, leading, and my focus is fundamental analysis, and that's also what I'll do today. So before that, as you know, we already have our Black Friday event. So Black Friday, we have tremendous sales, and we also have a special offer for existing users, not only new users, but a bit about what we do. We provide exclusive, reliable analysis, actionable stuff, to the point, empowering you to make informed trading decisions. Our best feature is the access to analysts. You can ask us questions all day long, even when markets are mad like they'll probably be today with the elections. And you can improve your trading instincts with strategies and see results improving. And so if you're not a premium member, you can join us with a 75% off. So let me share the link here. I'm sure that quite a few, and it's a shiny precious metal and also provides lots of volatility. So I'll talk about what moves the precious metal. Begin with safe haven, talk about yields, talk about the de-dollarization trends, relationship with gold and silver, and a few timings about gold. So first of all, safe haven. This is how gold is perceived. It's seen as an ancient form of money. So gold doesn't rust. It always maintains its form, and it's been during the 20th century, and also before that it was tied to currencies. There was the gold standard, the gold basis. And in the past, I live here in Spain. Spanish Empire used to trade lots of gold. So this is the theory. There's a limited capacity. You can't print gold. Alchemy doesn't work. So it's very valuable, and it serves as a hedge against inflation. It doesn't exactly work that way, and it's important to know from the outset that gold has been rising not only because of inflation or lack of inflation, but also because other people buy gold, what's called fear of missing out, or FOMO. So it works as a safe haven if people believe it is a safe haven. And as traders, we should make the trend our friend. So if gold is rising because other people are buying it, why not go with the trend? If it's falling, why not go with the trend? So trying to separate here between the myth and the practice. What we did see is that when Hamas attacked Israel on October 7th last year, gold jumped. And it advanced when fears of the conflict emerged. When the conflict calmed down in several occasions, then we saw gold falling. For instance, just a few weeks ago, Israel attacked Iran, but did not attack nuclear or oil facilities, only military stations. So markets concluded, okay, it's a limited deal. There's not going to be a wider war. The price of gold fell. But it's probably done retreating once again. The dips in gold are relatively small because there is lots of demand for it for various reasons. Other reasons. Gold and yields. So here I'm going to bust a bit more the myth of gold and inflation. This is a bit more useful than the safe haven thing. So if gold is a safe haven, it competes with other safe haven currencies or assets. So it competes with number one safe thing in the world, which is US debt. Sure, the US can default on its debt one day, so can other countries, but it's considered the benchmark. It's considered the number one thing. So if you can get good returns on holding US debt, you get yields, you get coupons. On gold, you don't get anything. So gold needs to rise in price in order to and in order to be valuable. And if yields fall, then gold rises. That's the inverse correlation that we see all the time. So when 10-year treasuries, that's the global benchmark in which many things are compared to. So if you want to invest in a startup, or if you want to invest in other thing that is risky, you compare it with 10-year US treasury yields. So this is the best thing. Investors compare it with gold, and when there are issues about the US paying its debt, investors learned to ignore it. Debt ceiling, government shutdown, you name it, it didn't prove that bad. Okay? So gold has an inverse correlation with yields. Yields down, gold up. And when yields go up, gold goes down. These moves are especially pronounced when there are big movements in yields. So if it's just a gradual tick up in there or down in gold, in yields, then you will not see a big movement in gold. But when you see a big move in yields after a rate decision, a big data point like non-farm payrolls or inflation, then you'll probably see a good move in gold. Now, if you're on the sidelines and you see gold rising despite an increase in yields, that shows that there's lots of demand for gold. Gold is strong. It's ignoring bad news and still rising. On the other hand, if yields are falling and gold is unable to take advantage of it, lots of people are taking profits, selling gold. So you can see that gold is weak. So if you observe these things, gold not reacting to yields as expected, you can conclude that either gold is strong or weak, and use this information in the next significant movement in gold. Okay? So let's continue. Before we continue, let's see if we have questions. Because I see there are, and about these topics. US bonds get interest, gold have to pay storage costs. Exactly. Gold has no yield. Because gold has no yield, it needs to rise in price to be attractive. And when yields rise, and this is something that is promised, then gold becomes less attractive. So yeah, let me repeat, gold has an inverse correlation with yields. That means that when gold goes up, yields go down, and when yields go up, gold goes down. Some people say you cannot hear, you cannot see, while others do see. In any case, I would like to say that this webinar is being recorded, and I'll also repeat it. So let's continue. De-dollarization. So what's going on why is gold rising in the past few years? Because central banks are buying gold. It's part of their drift away from the US dollar. The Russian central bank began doing it in 2012 when gold prices were very, very low, 1,100, 1,200. Then came 2014 when Russia made its first relatively small invasion of Ukraine. So it was sanctioned by the world, and Russia is not alone. Accumulation of gold accelerated since 2014, and it's part of its fortress economy. When it invaded Ukraine, full-scale invasion in 2022, and also beforehand in 2020 with COVID, then we saw Russia accumulating much more gold. So Russia is trying to have less dependence on the Western trading system, and one of the hedges is gold. So Russia, when the war broke out, the West seized some of Russia's central bank assets, dollars, gold, everything that was outside Russia. And Russia's selling of gold probably stopped, and now they're accumulating more gold. And let's talk about China. China, another country which competes with the West. And since 2017, when Trump came into office, and also during the Biden years, there's been more acrimony between the world's two largest economies. China also wants to diversify away from its dependence on the dollar. It tries to push its yuan up, making it shine. Doesn't always succeed. And both China, India, and also China, India, and also Russia are accumulating gold. in their central bank. So that's another factor. Moving away from the US dollar means trying to use the Chinese yuan. Euro is not so great as a reserve currency, and gold seems to be something that central banks are accumulating, pushing prices up. So let's talk about other commodities. Let's talk about silver. When the gold-silver ratio hits extreme highs, it's probably a time to buy silver. This is something that repeats itself. So I know some of you trade silver, not as many as gold, but this is something worth watching. Both begin with an X, XAU, XAG. When the gold-silver ratio hits extreme highs, it is time to buy silver usually, okay? And another thing that is a phenomenon, gold and oil. Gold and oil are correlated only around geopolitics. So when there's a significant deterioration, especially in the Middle East, we see both gold and oil rising because gold then benefits from its perception as a safe haven, and oil benefits because 20 million barrels of oil pass through the Strait of Hormuz every day. Okay? So again, gold and oil are correlated only around geopolitics, around the Middle East, because they have different reasons to rise. When things calm in the Middle East, both gold and oil fall. But if markets move unrelated to the Middle East or other geopolitics, so let's say the Fed raises rates, you'll see different moves. You'll see oil not moving that much, and you'll see gold falling. If the Fed cuts rates and goes dovish, then it's good for gold, not that much for oil. Oil moves more on changes in expectations. So if the Fed cuts rates because it's worried about the economy, that's bad for oil. When it cuts rates because it's only happy about inflation but sees a strong economy, it's good for oil. So we have different behaviors there. But gold reacts directly to the Fed, to the expectations in interest rates. So gold and oil are correlated only around geopolitics. Gold stocks. Here we have a much better correlation. So if there's a mining company which gets fresh gold out of the ground, the stock rises when the price of gold rises. That's easy. When the price of gold falls, the stock falls. And gold is not that much in use by miners, or miners have a diversified portfolio of metals. They are looking for other metals such as cobalt, platinum, palladium, and lots of copper. Electric vehicles use 4 times more copper than regular cars. Okay, let's see if there are any questions before I move to the next segment. Can you explain what gold silver is? So the prices of gold and silver, they usually trade in tandem, okay? So when gold rises, silver rises, and when silver falls, gold falls. I mean, because commodities are correlated and because both are precious metals. Silver has more use in some green technologies, and gold is used for other stuff like jewelry, but so they have their own supply-demand dynamics, but usually they trade together according to the general mood around commodities. But sometimes they don't trade together. And when the gold-silver ratio, the ratio between the price of gold and the price of silver goes to extreme highs, usually it's a sign that the price of silver will go up. I hope that answers the question. So let's talk a bit about timing of gold. So we'll start with the Indian wedding season. There are some dates which are important in the Indian calendar of weddings. And in India, there's a custom of buying gold as a gift. I think also in China and also in other countries. So, but this has a minor impact on the price, but it's something, if you're deep into those daily movements in gold, that's something to take into account. So before these dates, you can look to buy gold because it rises and they fall afterwards. So it's sort of a buy the rumor, sell the fact. This is a relatively small factor, but you can see sometimes there are movements that can be seen. Another timing for gold is usually, and this year is a bit different, but there is a seasonality in gold. It tends to fall in the autumn months. We are now in the autumn. We're seeing gold getting a bit stuck. I wouldn't call this a fall. Again, seasonality is something that works, except when it doesn't work. So it tends to fall in the autumn, but not every year. When things might be a bit calmer, we can see this phenomenon happening again. And in general, gold rises and falls with stocks and oil. So if markets are happy, gold is happy as well. When the economy is booming, there's more demand for oil, more demand for gold, more demand for stocks. And when things aren't going that great, all fall. Okay. And during the week, gold tends to have a U-shaped week. So it falls at the beginning of the week, finding a bottom on Tuesday or Wednesday, and then rising again towards the end of the week. Again, these are factors that move the price of gold when there's not a lot going around, such as big news. And I'm doing this webinar today, November 5th, 2024, on the day of the US elections. The US elections, that's a huge event. Okay. More things. As you know, big economic events move markets. That's when big moves happen. I think it's quite obvious, but it's still important to mention. And sometimes a release can trigger big action regardless of the data. This logic applies to other assets as well. So sometimes non-farm payrolls or retail sales or even a minor housing report comes out totally as expected. You would say total boredom, but markets were waiting for that event to move in the same direction they already planned to move. They just wait a bit more until the event is out, just to be sure there's no massive surprise. So at US releases are at Eastern time 8:30 in the US, and also 10 in the US Eastern time, which is in the current clock 8:30 Eastern is 1:30 p.m. GMT, and 10 a.m. Eastern is 3 p.m. GMT. So these are big moves, and the Fed makes its decision once every 6 to 8 weeks. So if you're trading gold, and if you're trading any other assets, you should note the biggest events in markets to see that even if everything comes out totally as expected, even if the Fed wants to keep us sleeping, we can still see a big movement in the price of gold, like anything else. And gold also moves quite a lot around the opening of sessions. So this is quite also trivial for people trading other assets, or if you have experience. But there's always action around the opening of sessions. So we're talking about Tokyo. Things are super asleep until Tokyo opens, and then there's a lot of action. London and, of course, New York. The New York Open happens while Europe is awake. So that's the highest period of volatility. I guess many of you are already aware of this, but anyway, I wanted to share that as well, because it's something that is important to know. Okay, that has been 20 quick minutes of general stuff about gold. I'll be glad to answer your questions about gold in general, what's going on, gold around the elections, or anything I covered and you want to know about. I'm looking now at the questions, waiting for you. I'll remind you of our Black Friday offer, which is here for new users, and for existing ones, you can access. You can look at the FXS announcements channel, and there's a link there to a special offer for existing users. and I think it's a very nice one. So I see a few people writing. Let's see what questions you have for me. We have a bit more time. So, is there a long-term hard resistance to expect? Example 3,000. I would say round numbers are eyed by many. If you look at reports by commercial banks, you'll see round numbers there. 2,800 until the end of the year. 2,850. And of course, 3,000, the biggest number. So these are yes, there are some numbers. I also use Fibonacci extensions when we try to project where the price will go in uncharted territory. So you look at the last range the asset traded in. So it hit a high, then hit a low. Wait, sorry. So gold hit a high, then dipped a bit. That's where you draw the Fibonacci extension, and then you project this and look at the 138.2 and 161.8 extensions. These can give technical indicators, but yeah, round numbers are super important. Why? Because other people see them as important. More questions? What's your opinion on BRICS potential to link to gold in terms of settling currency? Will this be good for gold? So yeah, BRICS is Brazil, Russia, India, China, and South Africa, and a few other countries joined this group. Some of these countries are autocratic, sometimes called the autocratic axis or the anti-Western group. It'll take them a long time to develop banking system, a transaction system that is robust enough to compete with the West. And in the meantime, not to be caught with holding dollars which are not actually held at home or some other kind of thing like that. They accumulate gold. So your question was, yeah, will they link it to gold? History shows that gold standard has caused deflation. Deflation is not like disinflation. It's not a slow rise in prices, which we want. It's a drop in prices, which causes depression, shows there's not enough demand. I don't think they'll have a system totally based on gold. I think gold is their hedge against fluctuations and is an accumulation in times of trouble. So they're diversifying away from the US dollar and into other assets. And one of these assets is gold. So somebody's not hearing sound at all. Sorry to hear that, read that. As far as I understand, everybody else can hear me. And in any case, we'll have a recording of this webinar. Any additional questions? Yes, we have another question. Gold tends to rise on election day. What are your experience? Are there any statistics? I must say I don't have statistics on election day. What I can say in general is that when markets hate uncertainty, the faster we have an outcome, the better for stocks and the better for gold. If there's a long count, if there are disputes, if there are demonstrations, that's a problem for markets in general. That means much more volatility, and it could hurt the price of gold, even if gold is perceived as a safe haven asset. I would expect markets to rise a bit today in general, just a bit, because that's the long-term trend and some anticipation of a clearer result than what we see in all the polls. Markets tend to be optimistic. So I don't know the statistics, but it seems to make sense to me. I think there will be lots of volatility. The faster we have an outcome, the better for markets, and markets will rise almost regardless of who wins. Just get us a winner as fast as possible. Yes. Can you please show the first page of what moves gold? And let me screenshot or write that down. Yeah, so with premium members, I'll be sharing with you this presentation in general. But sure, I can go back to the beginning of the presentation. Moving a bit slowly. But yeah, so to help you sum up, I'll make this is moving slowly, but here we go. So my presentation included gold on 5 topics: its perception as a safe haven, more relevant than not when it comes to geopolitics, when it comes to the Middle East. But in general, it's not exactly a safe haven. It's a safe haven as long as people believe it's a safe haven. Second, gold and yields. There's an inverse correlation between gold and yields. When yields go up, gold goes down, especially when movements are big. When yields go down, gold goes up. And the other way around, when yields, I said that a few times. Third factor, de-dollarization. Countries like India, but especially Russia and China, are moving away from the dollar and accumulating more reserves in gold. That helps the long-term uptrend in gold, something to be aware of. We talked about gold, silver, and other commodities. So when the gold-silver ratio hits extreme highs, usually it's a bullish sign for silver. And gold is linked to other commodities. Best times to trade gold are usually, it tends to hit a bottom in the middle of the week if there are no other factors. And it tends to move a lot around the opening of sessions, like other assets, and around economic events, sometimes regardless of these events. So that's a quick sum up of what we talked about, skipping a lot of details. I know, but it's everything we already talked about. Okay. Any more questions? I'll run through the slides, remind you of the Black Friday offer if you're not on premium, and check out the FXS announcements channel on Discord if you are a member, and you can see our special offer for existing users. Okay, any more questions about gold? In any case, I'll share the slides with you. Oh, thank you very much for your kind words, and yeah, I'm glad to answer everything here. Thank you. Okay, just a reminder, we will begin our live coverage of the US elections tonight at 11:30 p.m. GMT. For me, that's midnight here in Barcelona, and in the east coast of the US, where the vote ends first, that will be 6:30 p.m. Eastern, and we will go on as long as needed. We have a big team of analysts covering the news. We will be following the data as closely as possible, talking about assets. And okay. So that's it for today, for this session about gold. And that's it. I'll share with you the slides and check out the special offer. Okay. Thank you and bye-bye.